Thank you for waiting. We will now begin the investor meeting for the second quarter of the fiscal year ending March 2026, hosted by SoftBank Corp. Let me start by introducing today's speakers. Mr. Fujihara, Director, Executive Vice President, and CFO, SoftBank Corp. Mr. Akiyama, Vice President, Head of Finance Unit. Mr. Onoguchi, Head of the Finance and Accounting Division, Finance Unit. Mr. Sasaki, Senior Director, Financial AI Promotion Office, Finance Unit. Today's meeting is also being streamed live online. Thank you for tuning in. Now, to begin, Mr. Fujihara will provide an overview of SoftBank's consolidated financial results. Mr. Fujihara, please. Thank you very much for joining us today. We just announced our financial results, and let me try to give you colors. This is executive summary. We saw increase both in revenue and profit in all segments. We are steadily on good track against the full year forecast. We hit a record high revenue, adjusted EBITDA, operating income, and net income. And finance business contributed a lot by doubling in operating income. Now, let me share with you numbers. Again, we hit the record high with both revenue and profit growth. If you look at the right-hand side, we saw steady progress toward full year forecast. And you see the progress of FY25 first half, and you can see how good we are in the first half of this fiscal year. And the revenue, we increased by 7.9% to 248 billion. We hit the record high, 3,400 billion. We saw positive numbers in all segments. Percentage-wise, especially finance and distribution businesses posted a two-digit growth. EBITDA, again, good progress. It increased by 3.1% year-on-year to 29.5 billion. And progress to the forecast is 54.6%, record high. And let me give you more details in the operating income section, which is now. We increased 43 billion year-on-year, or 7.3%. And we posted 69.9% against the full year forecast. Again, record high as the first segment in operating income, and all segments contributed with positive numbers. Of 5 segments, 4 segments posted a two-digit growth, especially finance doubled in terms of the result. Media and EC, it included some one-time factor, and I'm going to go back to more in detail later. On the right-hand side, you see progress by the segments, all in good shape, and we want to keep the momentum for the second half. By the segment, first, consumer business. Revenue increased by 48 billion year-on-year, or 3.5%. More in detail, sales of goods and others increased a lot by 54 billion yen. And the unit price of the device increased by 2 digits. And also, the number of devices distributed increased as well. Electricity, we saw decreasing in trading volume, but it contributed in terms of profit. Broadband, we saw increase in subscribers. And mobile increased by 1.2%, or 9.6 billion yen. And the increased number of subscribers contributed a lot. That resulted in a good ARPU number. By the quarter in mobile business, we kept revenue increase for the last 2 years. And in terms of profit, all in all, we posted 8.9 billion increase year-on-year, or 2.7%. Progress toward the full year forecast was 60.2%. More in detail, for sales of goods and others, gross margin for sales and goods was 20 billion, which contributed a lot. And although revenue went down in electricity, but it contributed a little bit to increased profit thanks to improved sourcing cost. And for marketing expenses, device purchase support program was included, and the marketing expenses was 133, including device purchase support program. And the last half of this fiscal year, we may increase provisions for such a support program. Depreciation contributed to the bottom line, but other expenses increased a little bit. But all in all, we posted 8.9 billion yen increase year-on-year. Now, enterprise business, revenue-wise, increased 36.1 billion, or 8.1% year-on-year. Solution increased by 12.5%. That's a growth driver in this segment. And mobile increased by 7.5% year-on-year, which was good. Enterprise saw ARPU decrease, but telecom-related revenue was up by 6.4 billion. Net income-wise, it increased by 9.6 billion year-on-year, or 10.2%. Cost of goods and services and expenses were shown in this waterfall chart. Enterprise business was driven by solutions, especially a recurring revenue contributed a lot. So again, we saw steady progress with an increase by 25 billion yen, or 12.5%. Media and e-commerce. LY disclosed yesterday, so I just want to pick up some highlights. Revenue increased by 32.8 billion year-on-year, 4.2%. And media commerce increased both, and income increased by 13%, or 19 billion yen year-on-year. But at the time of STEP acquisition in FY23, our strategy was focused and selective. And because of that, some one-time factor was included, including remeasurement again. But net it pushed up income by 15 billion, or 13% year-on-year. We added some marketing expenses in September temporarily, but as a full year, we expect a positive number. Media minus 97, it said. Gross margin increased a little bit in the first half, but advertisement platform and Gen AI cost and offices are costed. So all in all, we saw negative numbers in media, but next year we drive cost reduction efforts more. We added security measures last year, and that in turn contributed better this year. Finance business, we see steady growth. Revenue increased by 37 billion yen a year, or 24.3%. PayPay grew by 25%. And if you look at the right-hand side, segment income increased by 20 billion, or 116.2% year-on-year. Of 207, 201 was PayPay. So PayPay contributed to the total operating income. Now, distribution business. Revenue increased by 75 billion yen, or 17.4% year-on-year. And income has been growing for over the 15 years. And the breakdown is shown on the right-hand side in the other business segment. For subsidiaries, first half, we saw a negative number against the last year. So we decreased by 9.1 billion compared to last year because we added more marketing fees for Satohuru business. But in full year, we want to achieve the positive number, and we hope to happily announce that at the end of the fiscal year. And also, we posted 26 billion yen for research and development. Net income increased by 24.9 billion yen year-on-year, or 7.7%. Progress toward a full year forecast was 64.6%. We hit the record high for first half, and we want to hit the record high for the full year as well. More in detail, on top of increased operating income, we also saw an increase in finance gain. Last year, we posted valuation loss, and income taxes increased, and the SoftBank posted deferred tax impacts from business restructuring last year, and Line Yahoo tax effects around PayPay was posted.
Next, I would like to talk about CapEx. Consumer enterprise to begin with. So, against the full year plan, 340 billion yen, the progress rate is 45.8%. We have no change in the full year forecast. And also, this includes the investments in AI computing infrastructure and AI data centers. As for the business, we are moving forward as planned. Regarding the IFRS 16 impact, this increased due to the signing of lease contracts for data centers. This shows the status of investments in AI computing infrastructure and AI data centers. so including the Sakai data centers and also GPUs. And as you can see on the right bottom, and the total investment in AI computing infrastructure is 257 billion yen. And we would like you to refer to our first half year of the forecast as well. And so we issued Series 1 and Series 2 bond type class shares. And this was funded by these two bond type class shares. Next is about primary free cash flow. And year on year, it increased by 4.9 billion yen and up by 1.4%. And as you can see, operating cash flow year on year, and that was due to improvement in working capital. And also the acquisition of the PayPay. So as for the investment cash flow was increase in investments to PayPay, so on, and increase in capex payments. And also there was a dividend from A Holdings resulting from LY's share repurchase. Last year, due to the primary CF, so there was an impact by the and as for the long-term growth investments, also separately mentioned, so adjusted FCF is as shown here. Net interest-bearing debt and net leverage ratio. So as for the interest-bearing debt, net interest-bearing debt, excluding LY PayPay. So last year was 3.1 trillion, so it has shown some increase. So EBITDA increased slightly. As you can see, the ratio from 2.4 from the previous year, it has improved. Next, the balance sheet. So our balance sheet is growing. The line 3, so it's about 17 trillion and 1.4 trillion growth in a year. So the total assets increased due to M&A and the financial business expansion by PayPay. So therefore, the financial business expanded. And also, equity attributable to owners of the company, as you can see on the right bottom, and that was increased by 389.5 billion year on year. And however, shareholders' equity ratio grew by 0.2% year on year. So it's almost 3 trillion yen. From here onwards, we would like to talk about KPI first on telecom. Mobile subscribers increased by 0.96 million by 3.1%. Looking at the churn rate, unfortunately, it has gone up 1.41% year on year plus. So this is due to the early churn. We are now working around the policy around this acquisition. Now the acquisition by quarter. So for this quarter, smartphone net additions, as you can see, it's 0.11 million, and while main subscribers net additions is 0.17 million. So this acquisition, as for the user acquisition, we are doing steadily. However, that is due to the early churn. So as early churn grows, then the acquisition for users who have possibility of early churn is being suppressed. So therefore, this landed the figure. So we need to absorb this situation for the meantime. However, those users has lower ARPU. Therefore, when we look at mobile subscribers, growth has less impact. So therefore, we would like to focus on users with a longer usage, including some packages like electricity and broadband and cars. So we would like to focus on these areas as well. So we are continuing this initiative in the third quarter as well. Next, ARPU is 3,720 yen, minus 30 yen by 0.8% decrease. So the total is minus balancing the increase due to introduction of new price plans for SoftBank and the decline in ARPU for enterprise subscribers. So when we look at a full year, the forecast for 30 yen has not changed. Next, telecom and electricity. As for broadband, subscribers continued to grow steadily. As for electricity subscribers, in the last third quarter, so we have focused on acquisition of these electricity subscribers. It has grown. Media and EC KPI as introduced by LY. And for EC transaction values here and the advertising revenue, and compared to the previous year, it has grown slightly. As for PayPay, the user of PayPay has surpassed 70 million, and MTU growth is also growing and more people using. Regarding the number of payments, grew by 19.1%. So the number of payments per person is increasing as well. And looking at the PayPay GMV and outpaced 20% growth, we would like to keep this momentum with the double-digit growth. And also the PayPay Bank's deposits and loan balances showed a steady growth as well. And the PayPay's revenue increased by 27.5%, and EBITDA increased by 24.1 billion yen, and the margin rate has also increased, and the revenue and the number of users increased. So the business itself is very strongly growing. Regarding the PayPay's IPO, as mentioned in the previous presentation, and we are looking at how it goes. So the business is growing strongly. So we would like to see with the confidence. And regarding the SB payment service, showing the good business growth, and GMV continued to grow and driven by non-telecom. Finally, I would like to touch upon ESG topics. One is about the integrated report was issued in September, and this time this featured interview articles with President and CEO Miyakawa and External Director Koshi regarding ESG initiatives. I hope you can take a look at it. And also the developed high-capacity 6L-capable HAPS payload. We would like to keep working on this area as well. One more thing is regarding the hours for excellence in corporate disclosure, and we were ranked number 1 in the telecommunication internet sector. So we received high evaluations in the several areas, categories, and management, and commitment to IR and so on, and fair disclosure as well as ESG related and voluntary disclosure. We would like to keep working on these areas onwards. Thank you so much for your attention. We would like to open the floor to a Q&A session. Thank you.
Now we'd like to start Q&A session. For Zoom participants, please access to the Zoom link we shared with you and press raise hand button. And please unmute yourself. Excuse me. We take questions from the floor first. Tokunaga from Daiwa Securities. 2 questions. First, I had the same question to Miyakawa-san earlier, talking about users who stayed with you long. By changing acquisition strategy for the second half of this fiscal year, acquisition cost or marketing fees might be lower or bigger, or how do you expect the churn rate in the second half this year? About the pricing, I don't know, you may want to do a price change for SoftBank users or Y-Mobile. Thank you very much for your question. We focus on retaining customer retention. So we want to offer bundled products because SIM-only users is different from users who enjoy bundled products. And we are seeing churns of early churns that could have a negative impact on net adds. And the third quarter, I think the impact remains, but those are early users or short-term leavers. So we want to see improvement in the third quarter or fourth quarter. In terms of acquisition cost and LTV, I think as a business, I think we are going toward more healthy trend. Provision for a device purchase program. It looks like more users are exercising the right to use such device support program. So we are looking at the trend in the second half. That might have an impact on acquisition cost, but I think a balance between the acquisition and retention will be better. Pricing, I don't want to say anything specific, but we keep watching the market trend and the users trend and figure out what best we can do in terms of pricing. I have a follow-up question. Competitors said that they regained customers in October from other carriers. So what's your view in October? So all in all, I think we are in good shape. Net ads, however, is still challenging. Second question. For next year and onwards, SBOAI, we don't expect losing money in the first year, and you may want to take any action about the pricing. So going forward, it looks very positive. So I wonder if there are any risks that we should anticipate in next fiscal year, for example, acquisition cost or depreciation or huge investment by LY. Any risks that we should anticipate in the next fiscal year? I think Miyakawa-san touched upon earlier a little bit. Consumer business, we cannot expect a lot, but we just want to keep the momentum. We want to post increase in both revenue and profit in all segments. And if we keep the trend next year and onwards, I think we will have more options. And we plan to invest a lot in AI, but question is how much we can monetize from that. Because we have a lot of things to do, and I don't know how much we can meet your expectation and meet a term plan. So at the moment, I cannot say anything definite, but I think those are the variables that we should anticipate going forward. Thank you very much.
We would like to take questions from Zoom participants. Masuno-san from Nomura Securities, please unmute and ask your questions, please. Two questions. One is about mobiles, net additions rather than acquisition. So individual, the consumers trend, and also or corporate enterprise, and how the trend is, and also the early trend. So what is the situation of such? And we would like to know what the direction that you are heading to. So I think individual ones have some changes and then some move, and we are now trying to absorb back the early Chen ones, and we need to be a little patient for recovering that. And for enterprise, and I'm sorry, for the trend, and early Chen is the biggest factor, so it may continue the next quarter as well, but we would like to also focus on recovering that. But mobile income is quite stable, and therefore we would like to remain this momentum of the profitability, and we would like to recover this. So looking at brands by brand and SIM and Y!Mobile has a little negative impact, but the SoftBank brand is doing well. And also Y!Mobile's the price hike, and I think you are looking at two different price hikes as well. And when we look at annual base, including both two, and maybe a 15 billion yen revenue increase can be expected by brand. There is an impact on the SoftBank brand also. So we can say there is an impact on the both brands, as you can see on the graph shown. So both brands have impact and also have absorbed some the price hike and the fee increase. My answer is yes, and there will be a positive impact accumulatively, and there may be some impact that we need to absorb from the previous ones. And my last question is about the AI investment. Looking at page 17, the AI data centers and the first half. So 6.1 billion and the full year 7.0 billion and total 115 billion. So I believe that the construction is ongoing in Tomakomai. And what is the situation? So it's proceeding, and from this fiscal year to the next fiscal year, we are proceeding with the construction, and there will be some added things, but we are proactively working on this. So at this timing, you can see this figure. It does not mean that we are not proactive enough on this initiative. So I would like you to also see what we will be doing in the next fiscal year 26. So the full year forecast 7 billion is excluding Sakai or including Sakai. As for Sakai, the ones that we have made decision, and then we can say that this figure is the one. I thought it will be 10 something billion yen on level, but it's 7 billion yen this fiscal year. Yes.
Next, Kikuchi-san from SMBC Nikko Securities. Your enterprise business is good. Your AI enterprise businesses in the Japanese market. And KDDI, I think, delivers something new, and NTT does something different. So we expect different things from different carriers. And this fiscal year, this first half, you talked a lot about distribution business. Page 14 of this presentation. Now, before, we sold a lot of PCs, and I think demand from support termination of Windows 10 could have a good impact on you. Profit margin-wise, a PC doesn't have a high profit margin, so that's why we may not have a huge increase in profit. So I wonder how I should look at your distribution business. And when you say R&D, it's hard for me to imagine what's the R&D in distribution business or other business. So what kind of R&D you do in the distribution business, and how much impact we should anticipate on the income? Yes, PC and the Giga School, there are some demands from those areas. But as you rightly said, PC sales doesn't have a high profit margin, but we have been posting income steadily is thanks to recurring revenue and subscription. Even though revenue may go up and down, but profit-wise, I think we can expect a steady performance. So we hope that this business will continue to post a profit next year. And once they post the revenue, we want to keep it recurring. Thank you. So recurring of distribution business is what is the recurring business in distribution segment? It's hard to imagine. What is that? VMware, for example, like something that you use every day. That's one of the product offerings that we offer to customers. When we say enterprise business, our accounts are large enterprises, whereas distribution business includes SMEs. So in terms of enterprise businesses, they are in different segments, but both should be well positioned for the AI. Thank you. Next question is again about enterprise business. I asked the same question to Miyakawa-san earlier. SBG, $3 billion. I don't think SBG can force SB to pay for $3 billion. And Miyakawa-san said, pay for use. But in reality, in terms of expenses, since you started using the capability, did you start paying or did you start recording as expenses? Well, we start using it for the sake of development, but it's not a lot in terms of expense. So it's for the sake of development. For the sake of use, different conditions apply. Well, use of crystals or use cases of crystal would be to use it to help reducing cost, to use it to help increasing revenue. So pay for use takes place when we use crystal for such use cases. Okay. Maybe a strange question. If you don't pay a lot, you cannot charge customers a lot. How should I interpret your business model? Well, we said we use capability, but again, mainly for the sake of development. But when it comes to offering capability to customers, we use a little bit. But again, we are still at the development stage. So maybe you may want to see this stage differently from later stages. So cost against usage is something that we want to study further to figure out the best balance. So next year and onwards, we fully start using the capability. And if you realize Crystal contributes a lot to your revenue, then you may be able to pay. You may be ready to pay as much as 3 billion. Well, 3 billion may not be the right number for us, but again, in generally speaking, we would pay for use, and we want to make sure that what we pay for use really results in better performance.
Now we would like to take questions from Zoom English site. CLSA Securities, Ramsey-san, please unmute and ask your questions, please.
Hi, actually, Oliver Matthew, but thank you. Could you tell us, roughly speaking, for your distribution business and enterprise business, how much would you say is AI-related revenues currently? And if you think forward, once you roll out your new services, just roughly, how much do you think this could be of your total sales in the future? Thank you.
はい、ご質問ありがとうございます。
Thank you for your question. The AI revenue is very limited right now, but for distribution, so we've heard that for distribution, AI-related service, maybe 10 billion yen level, I hear often, but for enterprise is not yet. And so without a new AI initiative, enterprise needs to grow organically to achieve 3 trillion yen base. And then on top of that, AI, how much AI can be added on top of the original sales. So only for AI revenue, we cannot really give you the figure right now. But in the next mid long-term business plan, then this is the area we need to figure it out with the certain number. So, however, as of today, I cannot give you the answer.
Okay, thank you.
ありがとうございました。
Thank you. For Zoom participants, if you wish to ask us a question, please press raise a hand button. Coming back to person on the floor, Tokunaga-san, please, from Daiwa Securities. For the first half, what was the income against the plan? Operating income increased by 3-4% year on year. So net income, should we expect more or less in the second half, given the first half results? I think we can reach a little bit more than planned as a final number for first half. And I think we begin to see more options that we can use for the second half. Looking at your result by the segments, all segments are good or some are better than others. Or media, EC contributed a lot. That was actually surprisingly good. Finance, we expected a lot in the first place, but they did a better job. Enterprise and consumer, full year, we want to achieve these kind of numbers. And last year, we posted good numbers in the first, second quarter as well. So second half, they might be challenging time. But I think all segments did a great job and hit the record high. Thank you. That's all for Q&A. This concludes SoftBank Corp investor meeting for the second quarter of the fiscal year ending March 2026. A recorded version of today's presentation will be made available on demand on our corporate website. Once again, thank you very much for attending today's investor meeting.